Welcome back to Investing and Trading Live. As always, my name is Josh Lilquist, and I have my good tag team colleague with me here today, Al Connickson, and we've been covering some good things on the markets. On the last segment, we talked about where to find your information. That's the facts, that's the price charts. And we're also looking for a lot of people that are able to make those decisions with a step-by-step, rules-based strategy. And that's what people need is step-by-step in their strategy, so that way they're not guessing in the financial markets. And I want you to cover that in this next segment here. But if you miss seats for that investing class that we do here locally at the Academy, just text the word investing to the number 210 for 2 seats for that investing class and that jumbo pack that will help you get started right away. Text investing to the number 210. So, Al, as we mentioned that last segment, we're talking about fact checking. And it's no, we're not, this isn't the news channel. We're not fact checking anybody. We're checking the facts on whether it's a stock or a futures contract, gold, oil, silver, lean hogs, whatever that may be, and finding the facts that are on a price chart. That is where you make your financial decisions. That is where you get your information to make those smart trading or investing decisions. Now, we have a lot of listeners that they want to have another income strategy. They want to have a second or a third, hopefully maybe a fourth or a fifth by using the financial markets. And so many people buy and sell in the wrong spot. It's all about timing. And when do you time the market? When do you get in, but also when do you get out? And I know you had a couple things you wanted to cover on about that aspect as far as why do people make the wrong decisions, but how do you help people overcome that and bridge that gap and get over those challenges to make better decisions in the market?
Yeah, I think one of the things that we do is point out the mistakes that people make because that's probably as important, if not more important, than knowing what to do. You have to know what not to do. And I think if everybody was given this quiz, and we do this, I do this anyways in the classes that I conduct, where I ask people to fill in the blank, and it's buy and then
Low,
blank and then sell.
high.
High. And everybody agrees with that. Everybody knows you're supposed to buy low and sell high. It just simply makes sense. But the truth is, the public generally does exactly the opposite. They buy high and they sell low. And you might be going, well, why would you do that? And you do it because you're a human being and because
We are human beings.
we're conditioned to follow our instincts, follow our gut, follow what our brain's telling us. And that has you as a trader or investor doing the opposite of what you should do. Josh mentioned earlier a step-by-step process, a rules-based process. The way that you do this, where you can actually, on a consistent basis, be buying low and selling high, is to follow a set of rules that actually shows you how to do that. And when I say that the public does the opposite, we know that because the facts tell us that. If you look at the market inflows, and by the way, it's when markets turn, when you have a turning point from going up to down or down to up, that typically happens when maximum investor sentiment is reached. And what we find is that at the top of markets, the peak of markets, that's where the ownership of stock by the public increases.
Yeah.
And we know that by looking at the inflows into the funds.
And why is that though?
Well, it's because of fear of missing out,
Yep.
FOMO. People see the market going up. Their assumption is this is just going to continue to go up. I've missed out. I don't want to miss out on any more.
And here's an example too. People say, okay, I'm going to buy XYZ stock, whatever it is, doesn't matter. Think of a stock that you like. And you say, you know what? It looks pretty good, but I'm going to wait until it goes up a little bit, gets more expensive, and then I'm going to buy it. And people do that, but it doesn't make any sense in the financial markets. It's totally opposite.
Right. That's where kind of the greed component of our human makeup comes in. You want to either basically what people do is what we call herding. They follow the herd. So they wait until other people have already driven something up, other people have made a decision, and then they follow that. But that has you buying high. And again, we know that because the public increases their ownership in the stock market at the peak of the markets. That's the riskiest time to be in. That's when you should be looking at selling. That's when people like Warren Buffett will tell you, when people get greedy, that's when you should be fearful. We also know, for example, during the dot-com bubble, the market didn't reach the top until there was that massive inflow that ended the bubble, massive inflow of buying by the public. But then it went sideways, basically, not sideways, but it slid. It went down for about 2 years until we had, during the third quarter of that year, more money went out of the market than ever before. What was that? That was the bottom of the market where people were selling when you should have been buying. So if you follow a set of rules that kind of takes your brain and your gut out of it, you have to control those emotions, that emotional component of trading. If you do that and you follow this rules-based process, step-by-step process put together by people that know what moves price, know what's important, that's going to have you buying low and selling high on a consistent basis. So that's one of the mistakes that people make that we help you to turn around. And, we have seen these huge market moves over the last decade. It's like a roller coaster. And what I would say is if you get enjoyment out of riding a roller coaster, go to Valley Fair. Don't let the market be the roller coaster for you.
You're exactly right.
Because in 2020, for example, the COVID-19 pandemic hit, all three indexes went into a bear market. And then 2021, the market came flying back to multiple all-time highs. Then in 2022, we went into a bear market for the second time in 2 years. Or in 3 years. So in this year, the market started out the year going up, but then March through July, it turned and it started to go down. So point is, we're seeing these big moves up and down, and unfortunately for most people, that either keeps them on the sidelines or puts them into an investment strategy that has them losing when the market goes down. Yeah. That's why I said earlier, you don't want to choose a direction and just do everything based on that direction, because this market is multi-directional. We show you how to take advantage of that.
Yep. That's the beauty of the financial markets, is there's opportunities no matter which way it goes. And one thing I want you to discuss here in the second part of the segment here, so stay tuned if you're listening right now, is how supply and demand works and how we make those decisions in the markets.
Sure.
But we have a lot of people that want to be able to take advantage of these opportunities. The opportunities are probably the best that we've ever. I mean, you've been around these markets for 50, 60, 70, 80 years maybe, right?
Zing.
Was that a bazinga?
It was a zing.
But you've seen market conditions, and is this probably the best opportunity you've seen in your lifetime anyway?
Absolutely. If you learn some of the more short-term strategies that we teach, and that doesn't mean day trading, by the way.
Correct.
Short term, you choose that time frame. Mm-hmm. But if you're looking at generating income, additional income, or your primary source of income, or just building your wealth, this is probably the best market environment that you will ever see to be able to do that.
Great market moves, and that's why we talk about those different assets to use the markets, how to be consistent, how to use leverage in the markets, basically using smaller amounts of capital by using leverage. And there's ways to do that to be efficient as well. And we'll cover that as well probably in the third segment. But if you want seats to this investing class that we do here locally, these are classes where we've really taught thousands just like you how to make smart investing decisions. Text the word investing to the number 210 right now for 2 seats for this class. And when you do that, you come into this class, you're going to receive the jumbo pack that has different stock picks in there, but also how to get started if you're brand new. Text investing right now to the number 210. When you do that, you're going to get a text right back, and it will say, welcome to Investing and Trading Live. It'll have a link to pick your own date for the investing class. So make sure to pick your own date. We do these during the week and on the weekends for these classes. So that being said, Al, I want you to explain supply and demand, because we have so many people listening. I mean, thousands and thousands of people that have been listening to the show here. And a lot of them say when they come into these investing classes, hey, you guys, you were talking about different income strategies in the markets. How do you do that? Where do you look? Mm-hmm. How do you get started? Or what is the right place to use, right thing to use? Talk about real quick how supply and demand works and how we can apply that to commodities or stocks or even currencies.
Yeah. Well, there are certain things, there are certain rules and facts in life that really can't be argued. Gravity is one thing, for example. If I jump up in the air, I'm going to come back down.
Wait, do you have to physically get space between your foot and the ground, though?
Is that what jumping is?
That's what jumping. Can you do that?
Well, then if you jump in the air, you're going to come down. But one of the other facts is the relationship between supply and demand. When there's more demand for something, price will go up. Doesn't make any difference what it is. And when there's more supply of something, price is going to go down. In the financial markets, just look at that as buyers instead of demand. When there's more buyers for something, price will go up.
Yeah.
When there's more sellers, price will go down. So those are facts that can't be argued. That's what we use to our benefit.
And that's on off a price chart is where we're identifying that imbalance, right?
You have to be able to identify that somehow, and it is in a price chart. A price chart tells you everything you need to know if you know how to read it.
Now, yeah, exactly.
Like reading an X-ray. A radiologist reads it. The patient doesn't read
And
it.
by the way, you don't need to be a doctor to be a trader investor. You don't need to be a radiologist. It's a skill. It's an acquired skill that we teach you how to do here at the Academy. Now, that being said, once you understand supply and demand, why is it so important to use multiple assets?
Well, because there are multiple things that happen. There are multiple impacts from the economy, the market. Market, by the way, is changing. This is a different market than we saw maybe 10 or 20 years ago. So it requires different strategies. But everybody is different as to what they want to achieve, what they're aspiring to. And by the way, that's one of the most important things you want to start with is what are your goals? What do you want your life to look like in 2 years or 5 years or 10 years? And then what's the best way of getting there? And it might be different for different people. But if you're going to do this, if income, whether you are looking at generating additional income while you're working or doing this as your full-time source of income, or when you're in retirement and you need income because your bills don't stop coming in, how do you do that? Well, you have to be able to do that in something that is short-term in nature. That's where some of the assets that we're talking about, you mentioned the word leverage. They also happen to be leveraged assets, assets like the futures market, the foreign exchange market, the options market. Those assets can be used in a short-term time frame, which is what you need if you're looking for additional income, but they also let you use leverage very much like a mortgage on a home. You put a small down payment down, and you own something worth, many hundreds of thousands of dollars.
But that doesn't come out of your pocket. It's just what the brokerage account just requires in your account. So they don't actually say, "Hey, pay me this down payment." It's just here's what we want in your account, and we're going to give you access to this buying power. Is how that works.
Exactly, but it allows you to have a small account and invest in something. Actually, own the movement of something that's worth a multiple of that. Could be 10 to 1, 20 to 1, 50 to 1. But that's what all the pros use. Warren Buffett, what advice does Warren Buffett give people?
Buy, hold, and sell. Buy and hold.
Hold on. But what does Warren Buffett do?
He makes most of his money trading options, actually.
He makes about $8 to $10 billion a year selling options and buying options. But he doesn't really tell the public that.
Yeah. You ever heard of the term, do as I say, not as I do? A lot of parents probably tell their kids that. Well, Warren Buffett is telling everybody, do as I say, not as I do. Think about that.
Yeah. In Warren Buffett, by the way, that's a good example of how we use people like Warren Buffett and big firms, because they can never get all of an order filled at one time. The great thing for us is that we can. But Warren Buffett, example, at one point in time wanted to have a large position in IBM stock, but he could not get it all filled at one time without the price moving away from him. It took him almost 9 months to get it filled in increments. What we do is we can identify where he's starting to take a position, and then we can just benefit every time he does another portion of his his gathering of that particular stock.
Yeah,
we talk about this in these classes. We'll go into more detail on that.
Yeah, what's pretty cool what you're explaining there. You're mentioning you can do that with a relatively small account, and that's relative to based on each individual, right? Small for some people could be $500. Small could be 5,000. Small could be 10,000 or 10 million. So whatever your account size is, you're getting access to the buying power. So don't feel like if you don't have $200,000 to trade and invest with, don't feel like you can't get in the market, because you can. But you want to learn how to use that leverage properly.
Yeah, that's one of the mistakes people make is assuming they don't have enough money.
Oh, I want to bring that up in the next segment is why it's so easy to get in the markets and why people do it without the education. That's why we have these investing classes. That it's so easy to get in the market. Learn how to do it first, and we introduce you to these concepts and techniques in these investing classes here at the Academy. To come into one of these classes, just text the word investing to the number 210-210 to learn these techniques and strategies that we're talking about. Text investing to the number 210-210 right now for 2 seats for this class and the jumbo pack. Coming up next, I want to talk about that, the common mistakes that people make when getting into the financial markets. We will be right back.